People saying hi to me on the group. So hi everybody.
So perfect. So thank you, ma'am. Thank you. And let me tell you, ma'am has always been a part of our journey
Yes.
since quite a long time, since 2020. So when I shared your invitation, a lot of people keep sharing that, she's such a busy personality. How could you manage to invite her? But let me tell everybody from 2020 onwards, like we have been inviting ma'am for a lot of different webinars, different
Correct.
sessions when we
We
do
did
with
a
a lot
bunch of
of.
work together in COVID also, right?
Yeah. Since COVID, I think started, and almost twice a year we do some or the other online webinar, either with
Yep.
some corporates, and every time I'm has been available. So again, some people have notion that you're quite super busy, but honestly, when it comes to work, when it comes to sharing financial wisdom, she's always there with us.
I must give you a disclaimer though, Saurabh, we are doing this on a Saturday and I'm babysitting my 2-year, 3-year-old son. So if he runs in here and starts speaking, all of you and the clients are going to forgive me. Although my mom-in-law is here, he might run in any minute and just say things. He has a habit of appearing on webinars. So if he does, it's just a, harrowed mother.
No problem, ma'am, because everybody's Saturday is for them. They're all joined in. So
Hmm.
superb. So let me start by introducing her. So again, it's again a great pleasure to invite. So warm welcome from Magnum family to all of you. So just to give a brief insight, the story started, and I would say, the most catching popular line about ma'am started when she did a session with Reliance and they tag her, the girl
Yeah.
with the broken neck. And again, very transformational journey. Started as a career in IT, then moved to consulting, then into AMC, worked with some of the biggest corporates, Microsoft, McKinsey, and then she, founded Forefront Capital in 2014. Later on, became the MD CEO of Edelweiss Mutual Fund and integrated JP Morgan Mutual Fund into Edelweiss, and very innovative, I would say, approach to start a Bharat Bond, which was a government initiative, and Edelweiss became the sole distributor for Bharat Bond. And today, again, Edelweiss AMC is one of the best performing AMC we all know. So the asset manager, it is being awarded in 2025 by Morningstar itself, and for being the best category fund specifically in mid cap, small cap category by Economic Times. And MAV has been awarded by many forums, Economic Times, 40 under 40 business leader, Forbes, Women Power, and again, Business Today, most powerful women, Fortune India 50 most powerful women. So again, the list goes on and on. So this is something which you guys have all, you can all access to the net. But most important thing which I really admire about the two books, one is Limitless and the second one is Mango Millionaire. So I would recommend all of you to please catch hold of this book. This is one of the most amazing book, which I have come across. And we will start the session today, ma'am, by decoding few of the statements in your book. And
Lovely.
with that, we will actually, open up the leaf for financial wellness, how it should be done, what are the, I would say, challenges do come in between, how as an investor they should manage their behavior, and your financial wisdom in whatever modes you wanted to share. Okay. So
Lovely.
perfect. So my first, from the book, if I would pick one very interesting line, what works on Wall Street won't always work in Borivali, Vasant Kunj, or Jayanagar. So what do you actually meant by that? This is why one should read the book. So yeah, over to you.
So I'm glad you're starting to quote this, but this is actually a very interesting line, and it's inspired by the fact that, look, I personally have lived overseas for many years. In fact, I've spent quite a few years in the US market, and because of that, every time I get asked in media कि आपने US market से क्या सीखा जो आप इंडिया के investors को कहेंगी, वहाँ पैसे वैसा होता है तो यहाँ ऐसा होना चाहिए, and I find these questions very strange because I genuinely believe that the experience is not comparable. In fact, the one thing I've learned from living in so many continents, I mean, I've effectively grown up and lived in 4 continents, is you do what is right for your circumstances, your conditions, your weather, and in the case of personal finance, your realities. Even when people quote Buffett or Jhunjhunwala, I always say that while they are great men that you can quote, you as an individual investor have your own goals, own circumstances, own aspirations. So You have to do what works for Jayanagar if you're Bangalore, or what works for Vasant Kunj, or what works for, Salt Lake if you're in Kolkata, or wherever you live. But personal finance has to finally be very good. We can, very personal. We can take inspiration from people's behavior, people's idea, but finally, it's not about it. Money is not, why do we earn money, right? It's not some race, where at the end of the day, when we are 80, Saurabh will say, I made more returns than you, Radhika, so I've done better. Personal finance is finally about making individual lives better. It's about the money that you work very hard to earn. And I'm saying this as a mother, taking care of your own goals, your own dreams, your family, sending your child to a better school, making your wife or husband happy, doing something for your parents that they wouldn't have done before. So it has to be personal and it has to be rooted in you.
Perfect. So again, related one question related to this. So when it comes to market, how
Yeah,
do you see people, how do you see markets going forward? Like when
yeah,
it comes to maybe US has seen its journey for last 30, 40, 50 years. A lot of investors have made money. And in India, a lot of investors have entered post-COVID 21,
yeah.
22. So what should be their expectation going forward for next 10, 15 years? And what kind of wealth creation I would say, what do you see that, will people make more wealth in next 10 to 15 years? So your insight on an economy, because again, when you talk about Mango Millionaire, so again, how all of us as a Mango man could translate into a millionaire, aspect.
So it's interesting. I think if you look at the Indian market today, and I was at an event yesterday celebrating 30 years of the Association of Mutual Funds of India. If you look at the Indian market today in terms of numbers, in terms of penetration, we are where the US market was in the late 1980s. And if anyone has followed the journey of the US market, the 1990s and 2000s was sort of the golden period of equity investing in the US. We are there in terms of our credit card takeoff. We are there in terms of our economic size. We are there in terms of our mutual fund industry penetration. So if you just go back and look at the data, we are at that point in history. Now, I think the market experience, Saurabh, has two parts. I always say there is a zoom in to things and there is a zoom out to things. And both are important because I think looking at the present provides a lot of people context ki ho kya raha hai, because finally we wake up and read the news every day. But looking at the future is what provides you conviction, because finally we don't invest for, I hope you're not investing for 1 or 2 years. I think if you look at the present, and since you made the point about COVID, investors who entered in COVID have seen an extraordinarily fortunate run. It actually, India for the last few years has become a stable place. In the US, you have a crazy president who's tweeting. In Europe, you have no growth. In China, you've seen, sort of economic subduedness. And suddenly, India is the source of political and economic stability. And all of us are looking at saying, India was stable जाता है because we always think of ourselves as a very chaotic place. And it's, if I can give you a small technical statistic, there's a metric that we have that measures the beta of Indian markets to global markets. Okay, that number used to be 1.5. That means if global markets moved 100 rupees, Indian markets would move 150 rupees. So we were volatile. That beta has come down to 40. So we are less volatile and we've been more stable than the world. And until 2024, I think investors saw no volatility, which also is thoda sa dangerous because you just assume that the market will move up and up and up and things don't move down. In fact, the last calendar year where people saw a correction was which one? I don't know if anyone can guess. It was 2015. 10 years that we last saw a negative year on the Nifty. So, in that sense, I think investors have seen a blessed run. Um, Corporate profits have grown faster than they ever have. India's balance sheet looks clean. India was macros. Even the biggest cynics in India, they'll say things don't actually look that bad. Then, of course, 2024 and 25 have been volatile years. They've asked questions, etc. So I think this is the short term. But if you ask me the structural 5 to 10 year growth story of India, I think that remains absolutely intact for a few reasons. One is, I think our demographics are incredible. By the end of the decade, we will have 100 crore working Indians, which is 1 out of 5 people in the world working is going to be an Indian. And so, if you ask me the single, and I speak at a lot of colleges and universities, if you ask me the single biggest asset that we have in this country, it is actually our young people. Um, the second interesting thing is that is happening is India's risk appetite is going up. Its risk appetite is going up in the fact that we want to invest differently, that we have access to credit. Someone made a point on the group, by the way, about FII outflows, that despite FIIs pulling out capital from this country, you have mutual funds who are adding 30,000 crores of capital every month through ordinary Indians and Mango Indians, by the way, of SIPs. So money is getting better. And the third is businesses are coming of age. I think Indian has always been an entrepreneur, but now you're seeing entrepreneurship in action. And I also do a lot of work with government. You're also seeing government starting to give entrepreneurs what it wants. Today, I can tell you, if you are a young entrepreneur in India and you have ideas, there is capital for you. I don't know if anyone tracked the news yesterday, but Edelweiss AMC just raised its first round of external capital, through one of India's largest private equity firms. But I can tell you that today there's no shortage of capital for ideas. So this theme of financialization, demographics, and entrepreneurship, I think, is going to come together very powerfully in this decade. Interestingly, since you mentioned Mango Millionaires, we already have 10 crore people who have an income more than 10 lakhs. And we have 10 lakh people in India who are Mango Millionaires, who are US dollar 9 crore plus people in India.
Perfect. So I think this number will definitely increase, and as a whole, Indian, as you rightly said, that our workforce is one of the biggest assets which we all have. And what I want to convey to all the investors out there, that wealth creation journey has started for India. So in next 10 years, we'll see a lot of, I would say, capital assets, capital goods, a lot of innovations happening in India, and eventually that will lead to a lot of wealth for investors as a whole. Coming to a second point, which is more personal oriented, as you rightly said in your book, you can be YOLO, YOLO, only if you are solo.
Yeah,
Financial security needs to be considered if you have family to take care. So
yeah.
many a times we live in a lifestyle where we feel zindagi na milegi dobara, let's enjoy. And at the same time, how one should strike a balance, what percentage of their take home salary they should be setting aside investing as a thumb rule. So just, your take.
So, firstly, I think, Saurabh, this is a very, very interesting question. And I think, while I will give you my thoughts on the question, and I'm not saying this because you are on the call, this is a place where people like you can help structure, guide, and advise on how to get these numbers right. Now, I'd say two things. One is life is a balance. I am not the person who says कि हर त्योहार पे जाके आप सिर्फ SIP करो और सिर्फ सेव इन्वेस्ट करते रहो, बिकॉज मैंने आपको शुरुआत में ही कहा था दैट लाइफ इज अ बैलेंस, राइट? इवन इन माय ओन फाइनेंशियल जर्नी, आई हैव ऑलवेज ट्राइड टू स्ट्राइक अ बैलेंस between investing, building a corpus for the future, and enjoying the money that I earn, because it is also a limited innings game. So I'm a big believer of the middle path. And I do believe that if you don't take moments to enjoy what you've earned, then you'll never enjoy the journey of saving and investing either. अगर फल थोड़ा कभी चखा नहीं और सिर्फ प्लांट करते जाए तो थक जाओगे लाइफ में. तो I've never been an advocate of that. I think what is very powerful here, and I called out this notion in the book, is the notion of rules. So young people always tell me that, it's very hard to save, Radhika, it's very hard to invest. कभी iPhone लेना है, कभी Coldplay की concert में जाना है. And I always tell them, you still pay tax, na? You can't avoid it, na? I mean, it must be really hard to pay tax. Nobody likes paying tax, right? But we have to pay tax. But why do you pay tax? Because for salaried people, tax is deducted at source. It's automated. Do the same thing with your savings and investments. I call it in the book savings deducted at source. And there are frameworks, but essentially, from your post tax income, put a target and say that is like my TDS, this is my SDS, savings deducted at source. And the most effective way to do that is via an SIP, because an SIP, as it hits your bank account, it goes away from you like tax. Now, if you are a young professional and you want to start with 10%. I don't even think that matters. Okay. It's very important to get the habit gradually. Work with people like you, scale it up. My number is close to 80%. And of course, as your income goes up, that propensity to save goes up. So my investing number is actually 80%, but it used to be 10% because I've also been a poor entrepreneur. So I think that journey is very, very important. And SIPs are just a great way. The other thing that I should tell you from my own financial journey, which is a mistake that I made on saving, is that hopefully for most of us, our income is going up with years. We don't readjust our savings and SIPs up. So I had this phase where I had set a standard SIP amount. 2-3 years I hadn't revised it. And then I saw money was piling up in my bank account and I was like, wait, my increments are happening and I should. So what I do every May when our appraisal cycle is done, I reset all my SIPs depending on my increments. And I do it with, this is something you can do with your financial advisor. But
Perfect.
start
So
with
I
the
think
number.
well said.
Savings
Yeah, no,
deducted at
no.
source.
Yeah. So I was just coming to that. So savings deducted at source. So SDS is a very new terminology, I think, which I'll keep using with all my, investors that every year, please apply SDS. And whenever you review your overall salary, income, etc., please do that. Because expenses is something, which we have already lined up. कि मुझे ये इस साल खरीदना है. But when it comes to investment, it actually needs a push.
Yeah,
Maybe by somebody at their family members, by maybe, their advisors, etc., whatever it is. So I think SDS is a very, I think it's a great shortcut or a great terminology which we'll put into use and we'll try to educate. Coming to debt, okay, another line or another key takeaway from your book, as you said, debt is not bad if it is in control. At the gym, you should lift as much weight as you can.
yeah,
So again, coming to this particular statement, but normally, ma'am, when I interact with a lot of my audience, when it comes to buying a house, so that is a time when they have to liquidate their investments in order to fund,
yeah,
I would say, their down payment amount, etc. And that is where most of the people are struggling because the way house price have gone up, some of
yeah,
them are finding it very difficult, and some of them have a doubt whether they should own a house of their own or not. So
yeah.
just I want you to, enlighten all of us.
So I think you've asked two very good questions. In fact, I see these questions also in the chat, and I think your chat is super interactive, so that's amazing, guys.
Sure.
But there, so debt is something that there's always been debate about in India. And again, my view on this is very, very middle path, right? There is good debt and there is bad debt. Now, bad debt, I believe, is the debt you take for your wants. क्या मुझे डायमंड ज्वेलरी खरीदनी है तो ईएमआई पे ले लेते हैं. Good debt is the debt you take for your needs. So I studied on an education loan. Not many people know that, but I feel the education loan created an asset, which is me. I bought a house on a loan. That also created an asset, which is my house. So good debt is stuff that takes care of your needs and they can be placed for good debt. Bad debt is stuff that creates wants and that gets you into a debt cycle. And actually, in the book, and I won't cover it here, we've talked about what to do if you get stuck in some kind of debt trap. Now, this whole thing of housing, housing in India again sort of is such a big debate. Do you rent? Do you buy, etc.? And I always say there is no right answer to that. But if you are choosing to buy and take a loan, it's very important to work with your advisor on what the right quantum of EMI and loan is for you, because there is a quantum that will cause you stress, right? अगर आपकी EMI या debt इतना बड़ा होगा आपको stress आएगा. But there is a quantum that you can manage comfortably. And I always say the right debt and the right amount, the house you bought and the EMI you've taken, it's correct if it lets you sleep at night and you don't feel you're trapped in a job to pay a debt. I think that's the way to think about it. And of course, we've given lots of frameworks in the book, but that's the principle that one should adopt.
Perfect. So just adding to, what ma'am said, we always keep recommending to most of our clients that your EMI should not be more than 40% of your take-home salary.
Correct.
It is a benchmark number which generally we feel is fine, good enough so that, people don't have stress. And 40% what we feel is easily manageable. And specifically, if both you and your spouse are working, then it makes easier for you to work out.
Yes.
Maybe with one salary, you are actually, building up the assets like house, etc. And for the other one, you're managing your household expenses or investments. So that should be the right balance or mix one should have. Another line, and when it comes to risk management. So in India, always we keep asking kitna milega, and what you said is not the right question. The right question should be kitna chahiye.
Yeah.
Because normally, suppose an investor come to us, he said, okay, I'm a moderate or a conservative. He got 12% return. We made him invest in balance or a multi-asset. But soon as you look at his other peers' portfolio, they have invested into equity. They got 18, 19%. And certainly, he or she wants to shift from a moderate to an aggressive. So how to strike that balance, and at an individual level, how we should determine that, okay, this is my risk appetite and I should be content, I should be happy with the kind of return I'm getting, just to strike a balance.
Yeah. So I think the key word in what you said, Saurabh, is the word balance. Because first you have to accept that there are different grades of risk and there are different grades of return. There is no magic कि मुझे see the magic is कि मुझे बहुत सारा return मिल जाएगा बहुत कम risk के साथ. That magic doesn't exist. It's always a balance. And I'm going to share one more analogy from the book, which I think will explain your point, and then we go to this point of kitna milega. So people think risk is a bad word, but life is finally about taking risk. If you were to take no risk, you would keep your money under your bed, right? You'd not even park it in a bank, but you know why you don't keep your money under your bed outside of income tax, right? Now, I will say, imagine everybody here, you go to theme parks, amusement parks, Disney World, Imagica, whatever it is, right? और आप थीम पार्क में जाते हो, you go to have a good time, right? But there are different rides in the theme park. Like if you take my mother, she gets very queasy on rides. तो वो मेरी गो राउंड में चली जाती हैं, थोड़ा बहुत फेरिस व्हील में चली जाती हैं, and she's okay. That's the level of risk she wants to take, and she knows it's not going to be a particularly thrilling experience. तो उनका रिस्क कम है और उनको एक्साइटमेंट उतना ही मिलेगा. Then there is my brother. He wants to go on the most dangerous roller coaster there is. And sometimes when he goes on it, he throws up because he has a bad stomach. So he has taken that much risk, but he's also got thrill sometimes and he's also got this sometimes. I think that taking sensible risk is like going to an amusement park and having a good time. If you have gotten bored, you've taken too little risk. If you have thrown up, you've taken too much risk. If you've gone, had a good time, gotten your money's worth, then I think you've taken the right amount of risk. Now, let's convert this to finance. My mother-in-law is here, right? She is an investor. She's a conservative investor. She wants to make more than FD returns, but I can tell you if her portfolio is down 20%, na, she will get very agitated with me. So, and I don't like to get my mother-in-law agitated. So, Saurabh, she is in very hybrid-oriented products, just with 20-30% equity, 40% equity. और वो उसमें काफी खुश हैं उनको 10-11 and I have told her ma if you do this आपको 10-11% रिटर्न मिलेगा. Honestly, she's thrilled with that. So it's very important to understand this is my amusement park appetite. Okay, this is the ride I'm going to go on. This is what I'm going to get. And if this is enough for me, like that 10-11% is really enough for her, then I should be happy and I shouldn't care which ride my neighbor is going or how much fun they're having.
Perfect. So again, as ma'am rightly said that, please understand your risk appetite, and based upon that, we should be content with our portfolio rather not just comparing with, somebody else's portfolio, because he or she may have a higher risk appetite. He can see a downside of -20, but, as an investor, you can't see that. So it's really very important for us to do that. And as a regulator also now, AMFI has made it mandatory, for us to do a risk I would say assessment for all our clients. So we are in the process. We have done for I think 100 plus, and we are in the process to complete that exercise for all of you. So this would, as an investor, would also help you to understand that yes, this is your risk appetite, and based upon that, the portfolio XYZ has been designed and suggested for you. And wherever required, I also need to take a necessary correction. Also, I'll do that based upon that assessment, which we are carrying right now. Okay, so moving to the next question. Again, ma'am, one of my interesting, I would say, line which I could read. Children cannot be raised under a financial spreadsheet. Owning the house they grow up in
Yeah.
can give them invaluable lifelong sense of security. So it's a very, very emotional and very touchy line, when I came across that in that book. I'll just read it again for, the audience again. Children cannot be raised under financial spreadsheet. Owning a house they grow up in give them invaluable long sense of security. So how would you, explain that?
So this line, and it also relates to this whole concept of real estate or not real estate, and it was written in that context.
Yes.
Now, real estate and this home purchase is one of the most complicated financial topics in India. And I always say that there are things in life that are emotional and there are things that are financial. Emotional things cannot be measured in a spreadsheet, and financial things must be measured in a spreadsheet. There is a very clear distinction. And zindagi mein, what is emotional and what is financial has to be differentiated. So, buying a primary home, in my view, is a very emotional decision. I am a financial services professional. I have a home. It's the one you can see in my house. And I have bought it. But if I were to do the math on this house now, it makes no sense because बॉम्बे में रेंटल यील्ड 2% है. अगर मैं इस घर को रेंट पे दूं तो मुझे 2-3% से ज्यादा नहीं मिलेगा. बैंक में मुझे 7% मिलता है. लेकिन I feel that having a house of my own and doing my own interiors and raising my son in his own home and having my cupboard of 300 sarees, it matters to me. So this is all emotional. By the way, I know many fund managers who say that the emotion of a home does not matter to me. The spreadsheet matters, and then they don't own homes. So I know many famous fund managers in Bombay who don't own homes because they don't see the emotional value. So if you see an emotional value in a home, you see the emotional value, and we don't argue about the emotional value. It's like my mother's, wedding sari to me is priceless. I'm always going to keep it in my cupboard. There's no math around that. However, if I were to buy a secondary piece of real estate, by the way, on an unrelated topic, that is not an emotional decision for me. Then I am going to do all the financial math. How is this compared to an equity investment? Is it liquidable? What is the maintenance cost? So it's very important to figure out what is emotional and not emotional.
Perfect. So on that note, again, we always keep advising to all our clients that, having a one house of your own, really, one should have. And as it is based upon your emotions, because, if you have that own house, you have a lot of financial security, a lot of mental and psychological, emotional comfort when you have a house of your own. So yes, having one house, definitely one should explore. But yeah, going beyond that, it's a pure maths and you need to work out in terms of, how do you play around that. So again, coming back to the next, I would say line, drop bad funds like bad bosses before they deal any serious damage in your portfolio. So now coming down to a portfolio level, how one should construct their portfolio in terms of diversification, and
Mhm.
if something is not doing good, what should be the time frame? Maybe it's 1 year they should give. If it is not doing good, they should come out. So what's your thought process on that?
So let's talk about portfolio building and then let's talk about review in two different parts.
Yeah.
I think on portfolio building, again, this is where an advisor will be very important. The analogy we give in the book is my favorite. It is portfolio building is like getting a thali, right? Thalis are popular all over India. Uh, from north to south to east to west. But if you notice that the thalis are very different in different parts of the country because weather conditions, cultural needs, etc., are very different. And I think that's why the thali construct works. Now, Saurabh and I, even sitting in Kolkata, where things are reasonably similar culturally, may have a very different thali because, firstly, a thali is not a single dish. A thali will have multiple components. So there will be some carbohydrate, there will be some dal, there will be some sabzi, there will be a small quantity of meetha. So a thali and a portfolio have to have different components. As much as I love equity, a thali ideally should not only be equity. Even if you want to go on a protein diet, nobody says go on a protein only diet. People say go on a protein rich diet. So I think a thali has to have different components. Those components have to be calibrated based on your body. Some people don't like gluten, so they substitute rice with roti. Some people like more protein, some people like more sabzi, and two of us can have different answers. I think the critical food components in a portfolio have to be domestic equity, some amount of fixed income because you need contingency money. I'm sure Saurabh will tell you that. Ideally, some component of gold and silver because when equity is too badly, commodities do help. If you are a sophisticated investor, you can add other asset classes like international equities, etc. But in these first three, to be honest, you have made a pretty decent thali for anybody. So I think that is how you have to start. And a thali should be such that you can digest it. So if there's too much of something, you will know it should meet your body goals and what your body can handle. In terms of rebalancing, this is what I suggest. You can, firstly, nobody should look at their portfolio every day. Nobody adjusts their diet every day. Okay. You can look at it once in 3 months. That's what I do. You should sit down with your advisor and have a conversation every year. But that doesn't mean you should change funds every year. Give funds time to perform. My horizon when I look at funds is I give them at least 3 years. By the way, if you're churning funds every year, you're just paying a lot of tax, and none of us like to pay extra tax. So please give funds 3 years. Every 1 year, I think you can look at your portfolio. If you need to do small tweaks in your portfolio, it's okay. Every 3 to 5 years, I think you can look at your portfolio to do structural tweaks because in 3 to 5 years, zindagi bhi badalti hai. You may change jobs, someone might want to buy a house, kids might have to go abroad, life needs may change. One of you who's working may want to quit to do a business. So then you do large structural changes. So think of differentiate reviewing into three parts: information that you do every quarter, small changes that you may do once a year, and big structural changes that you may do less frequently.
Perfect. So, in a nutshell, asset allocation is very much required. So, have different, I would say, investments in your basket, like, employee provident fund, your NPS, mutual funds,
Hmm.
golds. Have a mix of different asset class, something in fixed income, something into equities, something in the form of metals, precious metals like gold and silver. So, keep doing diversification. And as once a year is idle time where we should review our portfolio, and if something is, maybe not doing good, exceptionally well, or maybe, as per the market trend, we should review and change those respective funds accordingly. Okay. And one interesting another line, if you exit at regular intervals, you will miss the blockbuster ending in terms
Yeah,
of return. So normally, again, like we have seen time and again just now, and this Trump tariff and has happened last 1 year. Almost we have seen Nifty giving very zero returns almost. You
yeah.
see, but so now a lot of those thoughts are coming that shall we exit? Shall we park our money? Let the dust settle down
Mhm.
and we'll reinvest then. So your thoughts on that?
And it's interesting, there was a question on behavioral as well. I think the worst behavioral mistake that people make is trying to time markets. Most people are honestly terrible at it. If markets give you blockbuster returns in a year, I promise you those returns don't happen every day in equal quantity. They are very, very lumpy. And investors often lose more money by sitting out of the market on the good days than being invested on the bad days. I am repeating, investors actually lose more money by sitting out of the market on the good days than not being there on the bad days. Because the reality is, I had an investor about 6 months ago saying, if I knew that the market is going to fall 20%, ma'am, should I redeem everything I have and then reinvest at 20%? I said, first, if you know the market is going to fall 20%, you are a genius. And I can't tell you that. The second is when the market does fall 20, 30%, imagine the headlines. Imagine the environment. India khatam hone wala hai. Trump is going to take over the world. No hope for emerging markets. Will you have the conviction to invest 20%? Nobody does. So trying to time this stuff is extremely difficult. I certainly don't try and do it myself. Trying to time asset classes is very difficult. So I highly recommend you don't do it.
Perfect. So again, I think behavior, managing our own behavior is the most important aspect. And trust me, personal finance is not something very difficult. What is more difficult to manage our behavior as an investor? So, and if you have diversified your portfolio well, then a lot of the basics are being taken care of, and even you will see a lot of ups and downs. It would get managed because sometimes when gold is not doing good, your equity might do well, and if equity is not doing good, other assets will give you stability and will uplift your portfolio on a periodic basis. Okay, ma'am, I'll take one last question and then we'll ask the audience to, take up their questions. What does financial freedom mean to you personally? And, when it comes to a lot of youngistan out here, all of them, most of them are working in corporates and most of them wanted to retire early. So what is that benchmark a number which you want to give it to them so that they have a clarity in terms of that yes they are in a way towards their achieving their financial freedom.
So I've heard this concept of fire a lot, and maybe I'm almost like
Yeah, fire, yes.
older generation, but I understand financial independence and I can talk about what that means. Retire early मेरे को थोड़ा सा strange लगता है. Candidly, I don't identify with it because um, I think and this is not a finance conversation, I don't want to retire early. Uh, I want to do work I enjoy doing. And I think a lot of this conversation about retire early happens जब आप जो काम करते हो उसमें आपको खुशी नहीं मिलती है. And I think all of us should seek to build careers or work or businesses where you actually don't really feel like retiring. So I find this a little strange, and I'm going to be honest. Now, what I think you should not do is work because of financial duress. I think that's why this concept of retire early happened. And financial freedom to me means having enough money that you can enjoy your life and you work because you want to work, not because you're under pressure to pay any. That to me is financial freedom. You work for the joy of building, for the joy of working, uh, not because there's a gun to your head. You don't work because you have to pay the bills. There's that line that you see in movies के दाल रोटी घर पे provide करने के लिए मुझे काम करना है. I think when you have achieved that, then you are financially free. You don't work because you don't work despite hating going to work and having a crappy boss you can't see the face of. So you shouldn't have to do
Perfect. So again, all of us should aspire, to
that.
achieve financial freedom corpus. And as ma'am rightly said, it is that corpus which is good enough. With that, you will be able to take care of your day-to-day household expenses and your lifestyle. It does not mean that you will stop working, but yeah, you will not be forced that, that you have to work in order to maintain your day-to-day livelihood and sustenance. Okay, so I'll just take few questions from the chat and okay, so Pooja has a question. She has bought a second house, and then its net worth is okay. Is it worth keeping the first house, or put it on rent, or sell it and add money into financial assets?
So look, firstly, I think Saurabh is better suited because he will understand the nuances of real estate, and real estate is really very specific to the market. The principle I would give here is that a first house for consumption is an emotional choice. The second house you have to evaluate as an investment and sit down with Saurabh and evaluate the investment merit of that case. The problem with real estate is versus financial assets, it's not liquid. And I've seen so many cases, I can't even, as I said, my mother-in-law, we're dealing with one case as we speak, where she has a second home and the tenant refuses to go away. I mean, I don't know if that tenant's on that call, but we actually now have to do a legal case on that tenant. So when you need the liquidity, you don't have the liquidity. Partial liquidity is not an option. Plus, you keep having to do the maintenance. So, Pooja, I would really recommend you sit with Saurabh, but evaluate as a financial investment and remain liquid.
Perfect. So Disha has one question, EMI and SIP. So many a times we keep getting a lot of, these thoughts. Shall I first close my housing loan and then should I start my investment? or should I continue parallelly? So your thought on that, man?
So I actually, and I've done both. I think you can do both parallelly as long, see, the critical thing with EMI, typically, if you're doing an equity portfolio, you will earn 11 to 12% over the long term in an SIP. And I'm being very conservative and sort of correct me if I'm wrong. Typical EMI rates in India are 7 to 9%, right? So your investment case is very strong. The only thing I would say is your EMI, if your housing loans EMI is so big that it's causing you monthly stress, then I would pay down and reduce the EMI. Otherwise, you can run both in parallel. That would be my advice.
Perfect, great. So Disha, I think you got your answer. So long it is manageable, you don't have a stress, continue parallelly. But at some time, if you feel that it is causing a lot of stress, then focus on your EMI, reduce it, and then again you can come back and restart your funds. Okay, Rachit has one question. If you look at Edelweiss, AUM, Milestone, Investor Matrix, and the Investors Retail Revolution, what single principle or paradigm, remains the North Star behind every strategic decision? So it's more of, on
Ah,
your
interesting.
corporate, role, how do you take decisions? What are your thought process in terms of so that, at an individual level, we can also build those principles.
I think the North Star is building a company that you guys trust as investors because this, I think, in financial services and in the business of money, really the most powerful asset we have is trust. So everything we do, every decision we take, it may not always be obvious, is an attempt to build the trust we have from consumers. If you have trust, you will get more consumers. If you have more consumers, you will get AUM. Everything else will follow. But the bedrock of everything is just trust.
Perfect. So I think, very simply answered. I thought we will get a more elaborate one, but I think ma'am just translated into one word, trust. So whatever business, whatever profession you are into, again, whether your manager is trusting you, that is the other thought. And maybe if you are trusting your employees, the way when you build up your business or your products and services, whatever you have. So I think that's a, very, I would say very apt and very, very short, but again, very, very powerful word which we have got in terms of building that trust in the institution which we are actually, creating. So again, ma'am, like Shweta has one question. She has just joined a job, just passed out from MBA. So in terms of her investment,
Yeah.
how, what should be her allocation, being her first job and she want to start her investment?
So I'm glad you want to start, Shweta. My advice to you would be the same thing I mentioned on savings deducted at source in the book. When you start, I think the most important thing is habit formation. So focus on what your post-tax income is and put away some amount in via SDS into your savings and don't stress about the amount, Shweta. It could be 5%. It doesn't matter because I know that you're smart enough कि वो 5% भी grow होगा तो that you will grow it. Your focus should be on starting and automating your savings habit. That's all you should do. And do simple stuff. Don't worry if you make mistakes. Do very simple stuff. Discover your financial personality. Discover what kind of visitor you are to an amusement park over the next couple of years, and then you will find your zone.
Perfect. So I think the message for you is to start, experience the ride, and then later on you will yourself become matured in terms of what to take, what not to take. So, ma'am, very interesting question. We have, Mr. Vinod sir and Bihani ji. Again, both are senior citizen clients. Bihani ji is beyond 70, and again, he is an amazing person. So, few questions. Any specific advice for retired senior citizens thali? Some
Correct.
young का तो बता दिया, but again, for them, what should be the thali?
Okay, so I give you some thoughts here. And I must say that I don't like to average people. So I've met lots of senior citizens because I've realized different senior citizens have very different circumstances. For instance, my father is a senior citizen and he has a pension and a fully paid up home. Some others don't have. My mother-in-law doesn't have the benefit of regular income. So their amusement park and risk approach is very different, even though they're both senior citizens. So I think I don't want to aggregate and average all of you. Um, I would give a few advices, and I think senior citizens start at 60 and go all the way up. I would caution senior citizens against being too conservative because I think conventional wisdom says that. And remember, even when you're 60 with life expectancy of 80 today, you're going to spend at least 20 years in retirement. So being completely fixed income oriented and not having any growth assets in your portfolio, I would say अब आप चूज कर लो कि 20, 30, 40% आपको इक्विटी डालना है थाली में, वो आप चूज कर लीजिए, लेकिन कुछ तो होना चाहिए. In general, I think as a fund class, hybrid funds are excellent for senior citizens. I'm sure Saurabh and team recommend them, but multi-asset funds, balanced advantage funds, these are all very good categories for senior citizens. They are actually kind of pre-packaged thalis that can work really well in a senior citizen's diet. The third and fourth pieces of advice, I assume by now health insurance is taken care of. If For non-senior citizens also, by the time you're 40, make sure you have a good health insurance plan because that really is something that eats into costs in your life. Uh, Another piece of advice for senior citizens, make sure you're very liquid. So the real estate question is very important because as you get older, you will go mad managing properties. I've seen it in my own house. Liquidity is important for everyone. For senior citizens, it is extremely important. So make sure you're liquid. And fifth one, if you have a need for regular income, use your thali to give you regular income using mechanics like SWP. I must tell you a very interesting story of my mother-in-law. So she's a single woman, but she loves to travel. So we have a quarterly SWP for her, and I think last time she went to Japan, one of her classmates was asking her, तो आपके बेटे आपकी ये सारी छुट्टियां फंड करते हैं? She's like, नहीं नहीं, मेरे बेटे नहीं करते, मेरी SWP फंड करती है. And I think financial planning, when done right, gives a lot of dignity and atmanirbharta to senior citizens.
Perfect. I think very well said. All those five pointers, like, you should have your corpus well distributed, have 20 to 30% at least minimum on the equity side, so that, whatever interest rate keeps falling, that would get compensated by the equity portfolio. And also taking SWP at regular intervals, depending upon when you need money for your own personal hobbies and passion, maybe, which you wanted to exercise going forward. So Ashutosh has one very interesting question, man. You were into IT sector. What, force or what was the turning point when you moved into financial space?
Oh, I mean, I look like many people. Tech was actually my first job, and I was a bit like Goldilocks, trying to figure out what I liked. So I did tech, and I said, "ये थोड़ा." My degree is in business and technology, so I said, "Tech
Okay.
try करते हैं." I said, "ये मेरे लिए थोड़ा ज़्यादा tech हो गया है." Then I did consulting, and I said, "ये थोड़ा ज़्यादा management हो गया है." And in finance, I found the fit. I think there's no right answer to this. It's where you find your fit and where you find your joy. I was working on a transaction with someone else a few days ago, and you spend all this time on this legal contract. So I told someone, I said, "Yeah, I can't deal with law. It's a terribly horrible, boring job." And one of the lawyers from our council on the call said, "But I think this is very interesting." And I said, "That is why you are a lawyer and I work in finance." So I think careers are like arranged marriages. You learn to fall in love with what you do, or you're lucky enough to have a love marriage and, find your fit.
Perfect. I think very aptly, so again, with time, you will find your choices, you will find the way, things
Hmm.
towards which you are tilted, and you can take a call accordingly. So again, Arpita has one question regarding lump sum one-time investment. So sometimes, people do have one-time money, how they should deploy that, in what modes, whether it's one time or they should do it through STP mode, etc. So what is the right approach depending upon the time frame?
So it depends on what you're deploying into and what your investing horizon is.
Perfect.
Quite frankly, if you're deploying for 10 years, and this is very unconventional advice, doing an STP for 3 months is not going to matter. It's just monkey shanti. Okay, because over 10 years, nothing matters. But if you are doing something for 3 years or 4 years, you're doing it in a very high risk thing where maybe valuations बहुत महंगे हैं, then the case for STP matters. And so it really depends on the time frame, the asset, the circumstances in general, for shorter term investments into very volatile things, STP can help manage the volatility. For 10-year investments, honestly, it's all man ki shanti. It's also okay. Man ki shanti is also important.
Perfect. So one question, like normally we have multiple funds. Like sometimes we have a multi-cap as a fund, flexi-cap as a fund,
Yeah.
which takes care of large, mid, and small. So do you suggest putting in those or to have one specific large cap, specific mid cap, specific small cap as a part of diversification strategy? What's your thought?
No right answer. What is critical is that you have a mix of all caps. Don't run a pure small cap portfolio or a pure large cap portfolio. Now, अगर आपको दाल सब्जी और वो अलग से खरीदना है तो आप वैसे खरीद लीजिए। अगर आपको रेडीमेड प्री पैकेट थाली में खरीदना है तो आप वैसे खरीद लीजिए। बट द इम्पोर्टेंट थिंग इज आपके पास कंपोनेंट सारे होने चाहिए, बिकॉज इफ यू वांट टू बिल्ड इन इंडिया पोर्टफोलियो, I firmly believe you need representation of at least the top 250 companies in some measure. Now, the mix, how you want to do that purchase, it really doesn't matter.
Perfect. So I think Shatarupa, Ritu, I think both of your questions are being answered with this. So very simple, have a diversified approach into different funds. Don't simply take one high, aptitude funds because it may or may not do well. So the answer is to diversify well. Okay. House, and I think we have already discussed this particular aspect. Okay. If you had Okay, if Rachit has one question, maybe I'll take the above question, which is more relevant. Finally, if you had to leave one timeless investing principle, maybe like whatever Mr. Buffett says something, Mr. Graham has, margin of safety, what Buffett says, don't lose money, etc. For next generation of investors, what it should be.
Oh, this is deep. I'm not Buffett or Graham.
No,
But
your
let
thought. Yeah,
let me give you my principle. My principle is Indian. My principle is dal chawal. It is doing things that are simple, doing things that are timeless, and doing them regularly. And because it's dal chawal, you also mix asset classes. So I think the Indian principle of dal chawal is a pretty good principle, pretty timeless principle.
perfect. So again, having that simple approach, diversified approach, that's the long-term strategy in order to build your long-term corpus. Vibhor has one question: is Edelweiss AMC thinking of coming up with certain funds which deals in semiconductor, AI, etc.? Any thoughts?
Uh, it's too early to say no. We already have a US technology fund that, of course, has a lot of these companies globally. We have an India technology fund that has India technology companies plus 30% US. The universe is not big enough for us to do a specific AI or data center fund, and we don't like very, very narrow themes.
Perfect.
As the universe expands, maybe, but it's already present in our domestic tech fund and our global technology fund.
Perfect. So the domestic tech fund also has 30% exposure to global. And if you
Yes.
want to have 100% global, you have a global US technology fund
Yeah.
where you can actually diversify and you can park your money. Perfect, Suman. We are bang on time, 12:05
Thank you.
Saturday. I don't want you to extend, you have your family time and your kid might be, looking forward, for
Yeah,
you
yeah, he's looking for me.
to be there. But just one last thought, ma'am, on the overall, I would say the discussion which we had. How would you like to conclude? And one simple advice for us as an advisor, how we should also, accelerate and, keep on doing the work. Yeah,
No, I think sort of you're genuinely doing great work. And I do a lot of these conversations, but I must say that this was one of the most interesting audiences because even though I couldn't see many of them, I felt their energy on the chat group. I think it's an audience that is very focused on asking the right questions and keeping it personal and relevant to them. So I genuinely enjoyed this 1 hour on a Saturday. Sorry again for being late. But thank you all so much. It was really such a pleasure to talk to all of you. And I think don't keep continuing your financial journey. Don't worry about making mistakes. Do what's right for you. And remember, this is your journey. You have to make it work for you. If it works for you, it doesn't matter what anyone else says.
perfect. Thank you. Thank you, everybody. And thank you, ma'am, for giving your time on a Saturday. morning to all of us and enlightening us. And again, as we are completing 9 years, we have completed 9 years. So again, it's a great pleasure to grace this occasion with your presence. So thank you, really thank you. They'll say, and again, looking forward. Every year we'll try and have one session from all my clients so that this engagement keeps going up and the maturity level will also keep going up and they'll become much more matured investor and all of us will transform from a mango investor to a mango millionaire, to a multi-millionaire
Correct.
investor.
Thank you, guys. Bye.
Thank you everyone. And again, you can catch hold of this book. I really love reading this book. So anybody wants, you can catch hold of this book and a lot of I would say great insights. Thank you. Thanks
Thank
everybody.
you.
Thank you, ma'am. Thank you.